Ming Chia, just to share with you a company secret. Out of say 100 equity analysts that we take in, right? 80% of them cannot get through the probation stage.
Wow. And how long is the probation? 3
How
months.
long? Yeah, and what do we do? What happens in this stage?
Yeah.
6 months. 6 months.
6 months. Okay.
Yeah.
So what happens in that stage?
Yes.
Say bye-bye.
No, I mean, what do they need to do to prove themselves within that 6 months?
Why they say bye-bye?
Why do they say bye-bye? And
No, they say bye-bye. I say bye-bye.
You say bye-bye. Sorry.
No, because they cannot meet our standards. Look, we want you to do research, not like they want, hey, Mr. Tan, you have Bloomberg or not? No, we don't. We don't subscribe to Bloomberg. We don't subscribe to Reuters. We don't subscribe to all that. So how to do research? Huh? Oh, my goodness. You mean you got to do your research just by Googling? If I can do all my research by Googling on the desktop, I don't need you. So we tell them, if you are in the office all the time, I mean, this is before the pandemic, right? If you're sitting at your table all the time and you're an equity analyst, you're not doing your job. I want you to go out.
Well said.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free.
Welcome everyone back to the FIRL podcast, best place for long-term investors. Now, this special guest today is something that, someone actually that we've been looking forward to see. He has made his mark right on the investment scene in Malaysia and hopefully globally in time to come. Now, without further ado, welcome to the podcast, Mr. Tan.
Thanks.
And for those of you listening, if you have not heard of capital dynamics, please do your Googling. But, Mr. Tan, I just want to start off with this question. And this is something that I've always been wanting to ask, but when I read or maybe when I watch things online about you, I can't really find, discover anything about this. So I want it from you yourself. What was it like before you discovered investing, I guess? What was the pre-investing Mr. Tan like?
Can I call you Ming Chia?
Yes, can also.
If you don't mind, call me Teng Boo.
Okay.
Mr. Tan sounds too formal, is it, Mr. Tan?
No, there are millions of Mr. Tan, but there's only one Teng Boo.
Okay, good. All right, Teng Boo. Yes.
And Ming Chia and John, just to before we move on, because Ming Chia, you said to Google capital dynamics, you got to be careful. Because we have an imitator from Switzerland.
Oh.
Yeah. We started ours in 1988, Capital Dynamics, and a Swiss company with the same name in 1999 used the same name. So we have been fighting them in terms of intellectual property trademark in many countries.
Okay.
Right.
So what would be the best keyword, Teng Boo? iCapital?
Yeah, iCapital also can, Capital Dynamics also can, Teng Boo also can.
Okay.
Doesn't matter.
Yeah. All right, perfect. Now we know. So Teng Boo, what was it like, when you were a lot younger before you discovered this beautiful thing called investing?
I discovered investing in 1971 when I was in Form 5, SPM.
Yep.
And basically it was through my father. And my father, we are from Alostar, it's a backward town. Even now it's still backward, but at that time there was no broker, so he got to know about investing in the stock market through some relatives who were already trading through brokers in Penang. That's how I got to know about the stock market.
I see. Did you have any interest prior to investing? Were you into sports? Were you into other hobbies or anything before you discovered this love for investing? Actually,
I was very active. I am not. My academic results are really terrible. If you look at them, it'll be any parents looking at my academic results will be very shameful, will be embarrassed. But I was very, very active. I was a school tennis player. I was playing basketball. I think I played literally every sport except hockey.
Wow.
So we played basketball. I represented my house. I was also very active in athletics. I nearly won a bronze medal in javelin. I got fourth place instead of third place.
How far were you away from third place? Don't mind me asking.
Not that far. If I practice a bit harder, But I was very poor in short putt and discus.
I see.
Okay,
I see.
Okay.
So
yeah. Okay.
I also know how to play cricket, volleyball.
Wow.
I reached the semi-finals of our school table tennis championship. We were in doubles and we lost to the pair that eventually became the champion.
I see.
So
do you play? Do you still play any sports, Mr. Tan? Teng Boo, sorry.
No, I just go for brisk walking.
Okay.
Good enough. Better than nothing, I guess.
But the best activity during secondary school days was chasing girls.
Oh.
But
do you have to run a lot for that one, or wasn't that difficult?
It's interesting because in All Star there's only one really boys secondary school, and there were two secondary schools that had only girls.
Wow, quite easy in that sense.
So we were like in a monopolistic position, So
yeah. My guess is the schools you were talking about is what? College Sultan Abdul Hamid and then Kiat Hua, is it?
No, that time Kiat Hua didn't have really English education. It was mainly focusing on Chinese.
I see.
For government school, English was only, as you said correctly, Sultan Abdul Hamid College. I see. And the girls' school was a convent and Sultan Asma School.
Oh yeah, Sultan Asma School. Okay.
Are you also from Alostar?
No, I used to study in Jitra for 3 years. So I used to go to church in Alostar. That's why I know Alostar quite well, actually.
Right.
Yeah. I'm actually from Sarawak, but Kedah definitely has a place in my heart. I spent 3 years there. So
I have to move on and ask a little bit about what it was like in essentially early 70s when it comes to stock market, because at that point in time, the stock market would have been very, very young. And I just want to get a sense, because someone like me and maybe even John we weren't even born then. One.
Correct.
Two, we have both of us don't even have a big idea of what the 90s crash was like, right?
Yes.
Let alone in the 70s. So maybe you can give us like a picture of what it was like, starting investing.
Peek into the past.
Yeah.
Sure. Then we'll talk about how old I am, It was very different, definitely. There was no smartphone, no internet, and what my father and I used to do is because our broker was in Penang, so we're in Alostar, so we had to dial. It's an old telephone, you got to dial and all that. So by the time when the market is bullish, very bullish, it's impossible to get through to your remisier. By the time you get through, it will be 1 hour. And then the remisier was from this Penang broking house called Sun Tiam. Wow. He's so busy because there's so many customers and so many orders. If you don't give him your orders within 1 second, he'll bang down the phone. And then you got to try calling him after another 1 hour.
What? Okay.
And that time there was no such thing as T+3. That time was great. It was lovely for speculation in the sense that it was physical share certificate. So let's say I buy, Sime Darby or Hoppa. Sime Darby and Hoppa were the market, the speculative favorites at that time. So I have to buy Sime Darby today at say 3 ringgit, and I may not have to pay until 1 month later.
My gosh.
Because the share certificate was not delivered to the broker in Penang yet, because selling broker in KL didn't have the time to process the share certificate, and they had to physically send it. At that time,
I
there's
see.
no courier service and all that. So you got to physically send it to Penang, and the backroom people in Penang got to process it and then issue you the invoice, right? By the time you do all that, it could be like a month. And then at the end of 1 month, from $2 it went up to $5, you just sell and contra.
Wow. But is there no credit cap? Like, for example, how much can you buy? Or how do you determine the credit cap for the investors back then?
The brokers were so antiquated. There's no computers, don't forget. Right? This is all using, even at that time, calculator was not that not ubiquitous yet. You still have abacus and all.
Wow, abacus. Wow.
The more traditional Chinese type one. So this thing of what is your credit exposure doesn't exist, because a lot of times it is based on the trust of the customer. How well you know the customer.
I see.
And these things don't exist. So that's why when the crash came in 1973, not just brokers were badly affected, but listed companies also went bankrupt.
Wow. What did they practice like pardon my ignorance, but did they practice like an open pit system? And then how I only watched this in videos, right? How did they?
It's an open outcry system where you call your broker, like in our case, you call a broker in Penang. The broker will have a line to his trading boys in KLIC at the time, on the floor of the KLIC, right? Okay, can you buy for me 1,000 shares of Sandabi? So the broker will pass that order to his central dealing boy in Penang first, right? This central dealing boy will pass the order to this trading boy that they have in KLSC. And they will write on it was all manual, they write on the blackboard. Sandabi, buyer 2 ringgit, seller 202. And then they will do an open outcry, and then the buyer and seller will match.
What if the price change in between? Let's just say you place an order and then the price fluctuates so much, right? I mean, before it can give you feedback, Teng Boo, your price actually went up by, you still want to buy,
So because the quotation is, there's no electronic monitor, there's no electronic board and so on. So the quotation on KLSC were all manually written was written in chalk, written on a blackboard. So you want to change your code, you have to change. And by the time your broker, like my case, gets to me, probably the code will be outdated.
Wow.
So that is why a lot of those investors at the time were basically based in Penang, Ipoh, and KL. Because what they do is they will go to the broker's office and sit there. Because the broker's office would have a blackboard. And then they will have their trading boys writing the bid and offer manually with a chalk.
Oh gosh.
You can see it live, you see, right?
Yeah.
But if you're outstation, if you're away, like in my case, then you're a big disadvantage.
I see.
Wow.
I see. Wow.
So chalks and abacus. That is a different world.
We should make a documentary about that.
Yeah. And see how people, how the British boys at that time, it was really hot. The market was really hot. The term that they used at that time was hot money. So a lot of foreign funds came in. This was very speculative, basically from London.
Okay.
So, and they created havoc because all of us were novice. And then these British boys, they're always acting like as if they're still the imperial masters of Earth. So they stripped and they played all kinds of havoc with Hopa and Sandabi.
I see. Has all what you just described, I'm very fascinated with the history of the capital markets in Malaysia. Has any of this been documented anywhere in a book or something, Teng Boo, to your knowledge?
No, none. Because I tried to do research and I cannot find any materials.
Right.
All this is lost,
Yeah. And John and Minche, what happens is at the end of every day, right, Monday to Friday, at 7 o'clock, RTM, Radio Television Malaysia, right, will announce all the transactions for the day.
Whoa.
So how long would that take?
About 20 to 30 minutes.
Oh my gosh.
Not many transactions, I guess.
No. What they do is they'll give you the from A to Z, the high, low, and the close.
Okay.
Wow.
Because you don't have live quotation, right? At midday, at 1:30, there's the midday news, and then they give you a brief summary of the report, right, of the market. And the close at 7 o'clock, they give you the full report. And that's where my father and I will sit down and listen. OCBC went up 50 cents. Wow, you calculate, you make extra 5,000.
Oh, you have to record your returns yourself, right? In that sense, because no one was doing it for you. Wow.
Yeah.
Okay.
No such thing as Excel spreadsheets also, MJ.
No computers.
Wow. But I just want to get a sense before we go on into maybe value investing, right? Which is, now we know what the KLCI 30 looks like. I think back then, I'm not even sure if there was a KLCI, but some of the big companies back then, you mentioned a few names like Sime Darby, Hoppa, and OCBC, but what was the Maybanks and the Maxis of the world back then, Teng Boo?
No Maxis, of course, right? Nanda Krishna probably maybe still running naked somewhere in Frankfurt. Maybank was, because Maybank started by a Chinese, Khoo Teck Puat.
Yes.
Right, and at that time, Maybank was seen like a bank that could collapse anytime. It's not like what the Maybank, what you see now. At that time, the bank that is trusted that it cannot collapse is OCBC. OCBC was like the pinnacle.
I see.
Maybank is like the young kid on the block.
The startup.
Yeah, because by 1971, it was only about, I think about 5-6 years old only. And in the 60s, it also nearly went bust.
I see.
Right.
Yeah, I remember reading about that. Yeah.
And there was no Sime Darby. It was created by this Slater Walker, James Slater and Walker from UK, where they did a lot of mergers and acquisition and push up the price and created a new conglomerate called Sime Darby. Same thing with Hoppa.
I see. And would it be safe for me to say that the conglomerates dominated the big market caps, or were there other different kinds of businesses? My guess, and correct me if I'm wrong, that time the oil palm industry wasn't that developed. So there's no such thing as semiconductor.
There's no semiconductor, there's no oil palm.
So what were the industries that actually dominated?
The constituents,
Yeah, what were the constituents?
Tin, rubber. Yeah.
Okay. Tin, rubber. Okay. Other than that, were there like any manufacturers or any industrial?
Yeah, Dunlop tires.
Oh yeah, Dunlop. Yes.
Right.
That time, the Mui group already existed already.
No. Not yet.
Not yet, right?
Oh yeah, Mui was only in the 80s.
I see.
Because if you look at the food industry at the time, most of the manufacturing were import substitution. So you look at Dutch Lady, Fraser and Neal was already around, right?
Okay.
And the banks, OCBC is very prominent. Some tin companies, some rubber companies, there's no oil palm, and no oil and gas, no semicon.
How times have changed, right, John?
Yeah, exactly.
Yeah.
Yeah, I definitely want to sit with Teng Boo over coffee to discuss more about this. But
For sure.
Maybe we can one day sit down and do a movie about it.
We're looking. That would be awesome, actually.
Because a lot of people don't realize at that time how the British boys, Slater Walker, and a few other people who raided. Hoppa was belonging to the All family of Singapore. They made the tiger balm called.
Yes.
Tiger balm, right? And then this British company, these British raiders came and raided them. And then basically what they do is they push up the share price. Right? And then issue shares.
Oh.
Whether it's B or Hoppa, they issue new shares. I mean, let's say at 10 ringgit, when the share maybe it's only worth 2 ringgit, they issue new shares at 10 ringgit and then they acquire more. So within 1 or 2 or 3 years, you see suddenly a huge conglomerate coming out of nowhere.
Purely
And of course, all this eventually collapse.
Yeah.
So,
I guess now I have to ask, right? You've seen all that, and then you started in the 70s, and then you mentioned that there was quite a formative experience in that, to use your words, the British boys came over and caused a mess. How do you then go from that to discovering value investing specifically, right? And why? Why do you decide to go with that?
I think I'm born somehow. God created me as a value investor right from day one.
Really?
I always look at values, not just in investing, in anything. So it is something that is innate in me. It's not foreign. I discovered Warren Buffett in 1982. I think I probably was among the very few Malaysians who discovered Warren Buffett at that time. And when I read Buffett, Graham, and Philip Fisher, Templeton at that time, I was really a value investor even before that. So when I read all this, then it makes sense, man.
Yeah.
So,
Right.
I don't know why I'm born with that very cheapskate mindset, looking for value, looking for posts.
In Hokkien, there's a saying, cakap tua kuih gu chia lin. So
yeah.
Does it capture the essence of what you just said in a way?
But now no more gu chia lin, ma. No more bullock cut already.
No more bullock cut already.
That's correct.
But that's the Penang saying, MJ. It's like the 10 cent, right? Is the value is bigger than the bullock cut wheel actually.
But I have to ask, maybe to get a little bit more shape, right? Because value investing has sort of evolved so much, and there's so many different versions, so many different descriptions. So as essentially let's call it a value investor since 1971, right? How would you describe your version?
It has changed. Ben Graham himself, from the 1932 when he started, when he almost went bankrupt, to the time before he died, his version also changed. Yes. Same thing for Buffett. Buffett was a strict Graham follower. Then he met Philip Fisher, he met Munger, and then he also morphed into something different.
Yeah.
So I think what has stayed constant, whether it's Graham or whoever it is the concept of margin of safety. I think that is whether you use a discounted cash flow method to determine value, or whether you use a back of the envelope method to go and calculate intrinsic value, those are in a way more secondary, and it will depend on what sort of investment, what sort of assets that you are investing in, the method that you use to value the investment or the asset. But whichever method you use, whatever tool that you use, the central concept is I must be paying something less for what it is worth. So that is fundamental. That cannot change.
Right.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content, and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
So let's say today, because you've seen like thousands of companies, right? So today, maybe one of your analysts or whoever just say, hey, Teng Boo, like, what do you think of this company? What are the first sort of, first few questions? So, like Buffett is known to deny or ignore investments or accept investments within the first 5 minutes, right? He has said that it's very quick for him. So for you, what are the first few questions you ask whenever someone throw you this new investment idea?
The business model is very important. That will determine whether the company has got competitive advantages. That will determine that to a large extent determine what kind of strategy the company has to adopt, and whether this company and how you will value the company, because the valuation of a company is different from valuing, say, let's say valuing a shop house, right? In the case of a business, you've got to look at the business model, because that will determine how competitive it can remain, what are the competitive advantages it has, and whether it can protect its margin in the long run.
Right. Great. I have a follow-up question, Teng Boo. So is there some sort of a framework when you look at business models? Obviously, the business books will tell you like Porter's 5 forces or flywheel and all that kind of thing, right? But I mean, in Malaysian businesses or Malaysian context itself, it's not as varied as a service-based industry like in the US, right? So you see a lot of manufacturers, people who do in a way more labor-intensive kind of manufacturing. So maybe can you take us through an example? Like I know that you have HPMT as part of your portfolio. So maybe when you look at some business like HPMT, which is like a precision manufacturer and all these kind of things, when you talk about business model, how do you do a benchmark, or how do you frame it out to know whether they have a moat?
I think let's not talk about specific stocks.
Oh, okay, sure, no problem. Maybe a precision manufacturers.
Okay. To give you a better illustration, if you wouldn't mind, AirAsia or Capital A, right?
Okay.
A lot of people look at AirAsia as an airline, as a low-cost airline, right? Now they've been listed since, I don't know,
2004, I believe.
2004, 2005. That's that era. Yeah.
So they've been listed for a long time, and we have never invested in AirAsia until March 2020, when the pandemic broke out. And the reason why we invested in AirAsia at the time when Buffett sold every single of his airlines.
Yes.
And we were buying so many AirAsia shares that some of our customers who never really called me, who never really troubled me and call up, Mr. Tan, are you sure you know what you're doing? You think you should don't you think we need to wait and blah, blah, blah. So I explained to them, I'm not buying AirAsia because it's a low-cost airline. I'm buying AirAsia because they're going through a digital transformation and the business model is going to change. And based on this new business model, of course, I assume that Tony Fernandez will succeed. Based on this new business model, I think Capital A or AirAsia is very undervalued.
Yeah. Correct.
So that's how I look at a company.
So you mentioned Tan Sri Tony just now, right? How then do you look at management? Because I'm sure you've met so many management in private meetings and all that, and just because a company is in a good industry doesn't mean that they're going to do well, right? I mean, take for example electric vehicles. We have heard many, very many. Of course, the success story of Tesla, but you've got some of the others which I will not name that have gone bust or have bad reputation. How do you actually determine, right? How do you actually tell whether the management is of a high quality or not?
There's no shortcut. You got to do your homework. I mean, I'm not a face reader. I got some of my staff who are very good in face reading. And I'm not a face reader. So what I do is you got to research as much as you can about the company, about the industry, about the person. And then from there, when you talk to the person or when you talk to his or her senior managers, you get a sense as to whether they're telling you something openly or trying to disguise or trying to hide certain facts. There are some listed companies in Bursa that I wouldn't name. You can see a lot of cash in the balance sheet. And they'll tell you, okay, we are reserving this cash because we're buying this land to expand our factory, blah, blah, blah. And it's been delayed and so on and so forth. And 1 year later, 2 years later, the cash is still sitting there and the delay is still there and so on and so forth. So after a while, you get the sense that, maybe the person is not being transparent with you. So it's all about doing your homework, doing your research as much as you can about the company, about the industry. It's like Transmile. Once upon a time, every analyst was so gung-ho about Transmile. Must buy Transmile. We stayed away from Transmile because we dig deep now. We found out the CEO of Transmile probably was running a small bus company in Johor Bahru. So if he was running a small bus company and wasn't that successful, so after a success of a small bus company in Johor Bahru, how is he going to make a success of a cargo plane, a cargo business on a regional and possibly a global basis?
Understood.
So I was skeptical in the sense I wanted to wait and let the guy prove himself.
I see.
I think we have to dig deep into the Transmile story because this is something a lot of Malaysians don't know.
They don't know, actually.
And I want to know from your perspective, because you, Teng Boo, you obviously avoided it and you went through all this process. But I know there was a lot of bias surrounding it, right? What do you think back then? Maybe also even describe to us, right? What was the Transmile saga all about, one? And then also, what were some of the things that misconceptions that they have about Transmile? I can think of one, for example. I believe Mr. Robert Kwok was also invested into it. So everyone thought, hey, if Robert Kwok was into it, obviously it's going to be a good investment, right? Yeah. So maybe from your perspective back then, right? What was the saga like, and also, what were the telltale signs that you should have avoided?
Robert Kwok made mistakes, right?
Yeah.
Warren Buffett also made a lot of mistakes, right?
Yeah.
So I think any investor or analyst or fund manager, you got to have your own conviction, right? Whatever, like I said, when Buffett was selling every single Delta Airlines and American Airlines, here I'm buying millions of Air Asia until my clients all were so scared. So you have a conviction, of course, you have to do your research. You cannot blind conviction, like our former 4th Prime Minister, the 7th Prime Minister has a lot of conviction, but all his convictions are wrong. That's why the whole country is, that's why he destroyed the whole country. You have high conviction, but is your reasoning correct? Are your facts correct? Is your analysis correct? So in our case, like I said, I know that the CEO was running what is known as South Johor Amalgamated. At the time, it was listed on Bursa. This was a small bus company in Johor Bahru and not making sometimes a bit of profit, sometimes a bit of losses and all that. In a protected industry like that, and you can't really succeed, how did he transform to becoming the CEO of a fast expanding, successful regional freighter? I couldn't answer that.
I see.
So whatever, like Mincha said, whatever Robocop sees in him, I couldn't see.
Yeah.
And the hype that analysts and investors always like to do is they always look at earnings forecasts. Right, the next quarter, the next year, and they were giving bullish forecasts. It's like top glove,
Yeah.
In July 2020, this one is written in our newsletter. In July 2020, 1 week before top glove peak, we said, please get out of all the glove stocks because the business model is not a suitable business model. Again, it's business model.
Right.
Yeah. So coming back to that as well, when you do research and you get a feel of management, are you comfortable investing in a company just purely on the facts that you gather? When I say facts, means you don't actually see management itself. Will you be comfortable putting in money into a company? You've done your thorough research or whatever. For the lack of a better word, they call it desktop research. But will you put into money that you've never met management before? And if you do, why? If you don't, why?
Possible. I mean, I'm glad you asked that question. A company like United Plantation, palm oil, right?
Yep.
Been around so long. Okay, I haven't really seen the CEO and so on, but I've seen their estates. They have a lovely Danish bakery inside the estate.
Oh, I didn't know that. Okay.
Genuine, authentic.
Okay.
And their yields, the highest and well managed. And you can look at the history, the record, the track record of United Plantations. Yes, I would invest in a company without having to see the CEO or their investor relations in such a company.
Right. Then is there a prompt for you? Like maybe you've done the research, but it's like, I really need to see the management. Do you actually go through that or not?
Yeah, we see the management. Our research process is rigorous, thorough. We do like any businessman would, any CEO would, before we buy Padini shares, we have to understand the industry. That means the competitors, and then of course, if we can, to meet up with the CEO himself, how he views his company, how he thinks of the industry, and how he manages the competitive landscape. You see.
I see.
So we do a 360-degree kind of research.
Okay,
that's a cool word.
360 degrees.
Yeah, John,
I have a question with regards to the business model and the changing landscape. So maybe if I could use an example of, let's say, big box retail, the convenience store, not so much convenience stores. I think retail malls that sell everything lah. If the industry has evolved, how do you have a checklist to see whether the changes the company can actually? So let's just say like big box retail, they sell clothes, they sell everything under the sun, right? And then when the consumers' behaviors actually change in a way, how do you make a judgment call to say that is this company adaptive enough to actually change an environment, or do you see management lacking in that change? And when do you actually decide, whether that is still a good investment over the long run?
John, research is something that doesn't stop. It's 24/7. It doesn't stop on Saturday and Sunday. I hope, many applicants who wanted to join us as equity analysts, Mr. Tan, you work on Saturday. So, problems and opportunities don't only appear on Monday to Friday. Problems,
correct.
Opportunities will come at any time they want to turn up. So research is 24/7. Be alert. Alert means it could be from reading an article, it could be talking to people. You go to a funeral, you go to a wedding, and you're chit-chatting with a bunch of people, and they say, this supplier, this company, blah blah blah, and then you put the pieces together. So it's very similar to a jigsaw puzzle, except that in the case of a jigsaw puzzle, you know the final picture. You do not know the final picture, and you don't know where the pieces of the puzzle are.
That's a very good analogy, actually. Yeah. I think it's more about also having your faith in management. Would I say that? Because it's like, for example, I don't know whether you've invested in this company before. Someone like Yinsen, because I thought about the you mentioned Transmile and then the bus company, right? So Yinsen, this company used to manage a fleet of lorries, and all of a sudden go to FPSO. So how would you trust people who tell you that they sell you this dream or this vision, and then how do you actually access that metrics to know whether these guys can actually deliver? Because if not, and then another industry is like, let's just say big box retailers. They say that, our consumers are spending this basket size, but then over time you see that the numbers are dwindling and all that, and people are not visiting malls, like how they consume products today. And how do you make the judgment call, actually?
A lot of it is that there's no scientific formula. A lot of it is gut feel. And at the end, it's a judgment call that, hey, look, I mean, you're not going to go out and trying to, like what you said earlier, a checklist where I put down a list of 20 factors and I tick the boxes, and out of the 20 factors, 19 I cross off. Therefore, I would say sell. But the last one that you didn't cross may be the most important.
Yeah,
correct.
that's true.
Correct.
So we don't. I mean, it's basically the same as how you run a business. You want to promote the staff. You want to make this person to be your CFO. Can you trust this person? Right. So you observe the person. You test the person without the person knowing sometimes, or with the person knowing. Right. You put the person in all kinds of circumstances. Stress the person. Watch the person. And if you're still not comfortable, then wait long. Until the time when, that's why people like Munger and Buffett will always say, at the end of the day, it's a judgment call.
Yeah, that's true.
Yeah.
So
the judgment becomes more accurate if you do your research more.
Yeah.
Does it improve over time? Based on your experience, does your judgment improve over time? I'm pretty sure, like Minjay and I, we do make mistakes in the portfolios we run as well. But does it improve over time? And how do you have a process to improve that judgment call, Teng Boo?
Don't know. I don't know whether it improves over time or not.
Okay.
But I guess the ending never stops. You never stop learning. You think you have learned so much, and then suddenly something new comes up. Oh my goodness, I never thought about it like that. So, which is why you have to go back to the central concept of margin of safety. You have to be a value investor has to be very humble. You got to be humble enough to say that, look, I cannot know everything. I cannot discount everything. There are a lot of things that I wouldn't be able to know. Therefore, let me have a margin of safety.
I see.
Okay.
Excellent advice.
So I actually want to move on to one area in investing that's actually not probably talked a lot about enough from where I sit. And that is how, moving on from the business models and then the valuation or that to how should one manage their portfolio? And by that, I mean, what's the best way to diversify, right? Like, you look at across the different investors, they believe that, you need to have at least 20 over stocks. Some say, no, less, like five and more is too many. And also, how much cash they should be holding. So maybe I want to get from your perspective, Teng Boo, right? If there is, what is the right amount of stocks to hold? Maybe we'll start with that first.
I think the answer will depend on each person's circumstances, right? If you look at companies that really succeed, they're all one product company. Microsoft is only, now Microsoft is a bit more diversified.
Yeah,
correct.
In the past, you take away Windows, Microsoft will go bankrupt. Same thing with Apple, right? You take away the iPhone.
Yeah.
Nobody buys their Macintosh except maybe one or two crazy designers who cannot get used to a Lenovo or whatever is this.
Yeah.
So those companies that really succeed, right, the emerging ones, Amazon.com, Tesla, Alibaba, these are all single product company, right? Single strategy. And those that are in multiple type, like say Sandabi, the conglomerate, they don't really do well. So you apply the philosophy, if you are able to, the investor is able to, and your circumstances permit you, why want to diversify? If I really bought the best stock there is, why should I go and buy the second best stock? Right? So if I buy the best stock and then go and buy 20 stocks, so the 20 stocks there will be diluting this best stock that I have.
I see.
But of course, this strategy is not applicable to everyone because to do this, you got to be very familiar. You got to be long-term focused, right? And your financial and personal circumstances must permit it.
Yeah.
So in the case of Minche, you're asking maybe for a typical investor who is not so well-versed, who thinks that I want to put a little bit here and there, so that I don't get whacked or I don't get wiped out if I make the wrong call. Right? So in that case, then it will really depend on the size of your portfolio. I mean, if you're having 100,000 as opposed to 10 million, no, it's a different call. And your financial circumstances. If you can afford to lose all the 100,000, who cares?
Yeah.
That's a good point.
Yeah.
So, John.
Yeah, with regards to that size, right? A lot of people, especially the younger ones, Teng Boo, I'm trying to wind back to when in the 1971 when you started off and the capital that you had. I don't know what was the size, but a lot of young people today said, "I'll wait till I have money, then I start investing." So, what would be the advice that you would be giving to this young people who want to start their journey, but they are already very hesitant because the lack of capital they have, and then they, just afraid of being wiped out in the market and all those kind of things, Do you come across questions like these from beginners?
Every rich person, financially rich person, every wealthy person starts off poor. Either starts off poor or their father or their grandfather started off poor. Everybody started off with nothing. So how do you take from just earning a few $1,000s to be a multi-millionaire, right? So that kind of mindset is wrong because there's no magic formula where I can take you from $3,000 to 3 million in 1 year or 2 years. It's a process, and you got to go through that process, and that's where compound return comes in, right? And if you understand compound return, if you keep, there's this advertisement which I really enjoy that tells you that if you start 1 ringgit on 1st of January, and every day you keep doubling. What do you have at the end of 31st of January?
Yeah.
It's mind-boggling, right?
Yeah.
So if you use that example, and compound return takes time. Okay, you have 1 ringgit, the next day you double to 2 ringgit, after you double to 4 ringgit, right? So in the first 1 or 2 weeks, you don't see much, right? Doubling from 1 to 2, 2 to 4, 4 to 8, 8 to 16 ringgit, 16 to 32. What's the big deal? 1 ringgit to 32, what can I do with it? But you continue because compound return, the longer it takes, the longer it runs, then the ending part of the compound return is where the big money is. So by the 31st January, you're looking at, if I remember, I think
1.07 billion. If it's I remember doing this because it's 10 cents, it's 107 million. If it's $1, I think it's 1.07 billion.
So John, you must be dreaming about this every day, right?
No. Actually, I'm not sure whether the ad is our ad.
Yeah.
Because I don't know, was it blue in color? Do you remember the color? We actually created this ad. So we know the math very well. They're like,
we know the math very well.
Great. Yeah. So you see, from $1 to $1 billion, right? Yeah. So, but in the first 10 days, that doubling, $1 to 2, 2 to 4, 4 to 8 is nothing.
Yeah.
So if you think of that first 10 days as your first 10 years, there's nothing.
That's a good one.
Right?
Yeah.
So you think that's sorry, go on. Yep.
Go on,
Yeah, so do you think that, I guess the follow-up question would be, is that first 10 years, right? How do you convince someone to stick to it and because that's the toughest part, right?
You got to do your research, you got to understand. There's no shortcut now. People think that investing in the stock market can be something that I could just close my eyes and then forget about it on the weekends. No, there are only 2 ways to be financially wealthy. Either you own a successful business or you be a successful investor. And a successful investor is great because you don't have to do all the hard work that the business owner has to do, right? You can pick and choose. But to do that, you got to understand business, right?
Yes.
To some extent, you got to understand accounting because accounting is the language of business, right? And how accounting can be mucked about, manipulated, and so on. So that is a basic. So you must know the language of business, and then you must know a business. What does it take to run a business successfully?
Yeah.
You don't have to be a businessman yourself or businesswoman yourself, but you can read, talk to people, watch, observe, and see how businesses succeed and how businesses fail. From there, you can apply to the fact that the company is listed on the stock exchange. It's just make it more convenient for you.
Yes.
The principles do not change.
That's true. I want to get into entrepreneurship next, but I have one last question, right? Because I've been a pro subscriber to iCapital for, I think, close to 5 years now. And I've attended some of the investor days. And then one question that keeps popping up is your cash balance, right? A lot of people like to ask, Teng Boo, why is it so high? We saw so many investments left, right, and center. How come, this is still so high? And I really want to get your honest response to this because, what do you think about, first of all, cash management as a whole in the portfolio? And specifically, why do you prefer in this environment, for cash to be that high?
The holding of cash starts from a simple premise that we cannot be right all the time. We cannot be able to forecast accurately all the time. So it's like a contingency reserve. It's like an insurance reserve in the sense that one thing I can guarantee you is that markets will go up and down. There will be crisis, there will be opportunities. That I can guarantee you. So the thing is, if you don't have the resources, the reserve, then when the crisis turns up or when the opportunities turn up, you are not in a position to make use of them. It's just as simple as that. It's just common sense, So if I'm really fully invested, let's say in 2020, I'm fully invested. I bought all the glove stock because everybody was bullish. I bought Hartalega, Kosan, Supermax, and so on and so forth. And then when they all drop, then what am I going to do?
I see. And I remember you liken it in one of your talks to a call option with no expiry, right?
Yeah. Basically, there's no exercise. You are the one that determines the exercise price. You are the one who determines when to exercise it, right?
Right. Okay. Now, John, any more questions before we go?
One last one on portfolio. To your point about, investing is a full-time job. What would you say to people who are not wired like you, not wired like us, who loves to do research, who love to, to think about stocks
work on a Saturday,
work on not even Saturday, work on a Sunday, Sunday afternoon, suddenly someone gives you
after church, right? After church.
After church or lunch after church, and say, hey, Teng Boo, I think this one every day my supplier increased my price. I got no choice. I have to buy from him, and then ding ding ding, your light bulbs all go up, So what would you say to those people? Leave it to the professionals or what?
Well, after the somebody can do it for you, right?
Got it.
I mean, if you don't think, if you don't have the confidence, if you don't think you have the experience, you don't have the time, you don't have the skills to do it, then might as well just get a well-proven stock. You could get a well-proven stock, like say, United Plantation that gives you a 6% dividend yield, and then just leave it there, for example.
But they will say, Teng Boo, I so slow, 6%. I go into crypto, I can make 30% a day. I get some stock tips, I can get 20%, and then I buy the low and I sell the high. I mean, I'm pretty sure in your 40 years, 50 years, I'm pretty sure people walk up to you and tell you this, and it's somewhat very common for me and MJ to get this as well. So what would you say to that actually?
Well, the other thing that's important for us, like you mentioned, the keyword at the very beginning is the investing framework. The framework is very important. So for us, one of the components of our investment framework is what we call a simple arithmetic of investing. In other words, simple facts. If I buy $1 and the share price goes down 50 cents, I lost 50%. But for me to recover, I have to make back 100%.
Correct.
Right? So then you put in probability. What are the chances that you lose 50%? What are the chances that you make 100%? Then you know that if you're going to do a kind of forecasting, timing kind of thing, then you know that you're playing a losing game. Because the chances of you losing 50% are so much higher than the chances of you making 100%. And the funny thing is this, which is what we also put in our framework, our Western framework is not symmetrical. The losing 50% will take you maybe 6 months. The making 100% maybe take you 5 years, 10 years, or never.
Yeah.
So the guy who is concerned with margin of safety, right? Let's say between you and Ming Che and you, John.
Yeah.
You are the more conservative guy. Say, no, I'm going to put my $1 in fixed deposit, just earn 2%. Ming Che said, no, John, you're so stupid. Let me go and show you how it is, right? And true enough, he went to Top Glove at 9 ringgit, right? Now it's 170. So it's lost 80%.
Yeah.
But you still have your $1. Yeah. His $1 has become only 10 cents, 15 cents. So what is well? Well, is relative. It's not absolute. If everybody is a millionaire, nobody is rich, nobody is poor.
That's true.
Correct.
But now you got 1 ringgit and our poor Ming Che has got only 15 cents. So you are 8 times, 7 times richer than him. So for a person who bought Top Glove, and there are many people who bought Top Glove at 9 ringgit, right?
Yes.
Holding up to 170. So from 170 to go back to 9 ringgit, that means you have to make something like 700%.
Yeah.
Oh my goodness.
The math is very clear and very obvious.
Yeah.
Simple.
Yeah.
So
risk reward.
Don't look down 6% because we did, like I said, research is important. We have done our research. If let's say you take the Dow Jones Industrial Average, right? You know that it's been hitting all-time high for the last few years, right? So if I was to ask you from 1926, which is midway, the peak of the Roaring 20s was 1929, right? And the bottom was about 1922, 1923. So 1926, January is about the midway. So I would ask you that you invest in the Dow Jones Industrial Average on 1st of January 1926 up to now, up to 2022, what has been the annual compound return?
I'm guessing including dividends.
No, excluding dividends. Just
excluding. I'd say somewhere between 7 to 8%.
Now it's about 35,000 points, right? At that time, it was less than 100 points.
Wow. So 25x really.
More than 25.
35.
35. 35. Yeah, I heard 25. Yeah.
It's only 5.74% compound return.
Yeah, but 5.5% compound over that period,
So John, you asked me that now. People complain percent, right?
Yeah.
Yeah, that's good.
Don't look down on 6%.
Yeah, no, actually, we, you know why or not? Because one of our research team members, he was telling a colleague, and I always love to share this story because he was telling his colleague about Vitrox. It's like, if you bought Vitrox and you kept it, right, over 15 years, you made 100x, And then he said, you have to wait for so long, 15 years to get 100x. So for them, right, for me, right, I will be like, my gut is on the table already and said, my God, can you find me 100x investment? Over 15 years, even 20 years or so, I don't mind waiting, But you see, the perception of time frame for a lot of people is not there, you see. That's what I'm trying to say. Yeah.
So I think just to move on, there's actually I have so much more to ask you. But now I have to ask Mr. Teng Boo. You're known to be an investor, but there's another side of you which is a business owner, right? I think people tend to forget that you run iCapital, the first and only, if I'm not mistaken, closed-ended fund on Bursa Malaysia. And I just want to start off by asking, right, what has been your journey, listing the company, expanding overseas? What's it like? Because that skill set, as you rightly pointed out earlier in the podcast, is quite different from the investor skill set. The investor is like the astronomer, right? He studies the stars, he studies space and all that. But a entrepreneur is like a astronaut, right? He gets his hands dirty. So maybe we'll start there.
I don't see the distinction between investor and businessman. They are the same.
Okay.
For me, there's no distinction.
Okay.
So when Buffett said a long time ago that he's happy to have a foot in both camps, in the business world and the investment world, I totally agree with him, because what I learned from the business world, I applied to investment. What I learned from the investment world, I applied to the business world. So there's no distinction. And I suppose the approach I'm taking is different from a typical fund manager. A typical fund manager would look at would look at buying shares of whatever it is as a piece of paper, whereas I look at it as if I'm going to start that business. So like when MPI plunged in 1998, the Asian crisis, plunged about 5 ringgit. I look at it not from a analyst point of view. I wasn't going to forecast anything. I just look at it from the replacement cost. That time was valued at about, because it was about 5 ringgit to 10 ringgit, so it valued about 500 million to 1 billion ringgit. And to be able to just replace whatever they have, it costs a lot more than that. So just to give you a simple example of the business principle and the investing principles. So if I were to go and start a semiconductor company, it costs me a lot more than that. And here I got a bunch of senior managers who have proven running it on my behalf. But the part about expanding overseas, listing iCapital.biz, Berhad, listing iCapital.biz, Berhad was a tremendous achievement for us, because within the 2 to 3 months, we did all the fundraising all on our own. We did not allow any investment bankers to raise the money. We wanted to do it ourselves.
I see.
We wanted to choose the investors. And in about 2.5 months, we raised about 250 million ringgit. So that was a very significant achievement for us. And then, now we have got one China fund that we run out from the Hong Kong office, the iCapital China Fund. We've got 2 funds running from the Sydney office. One is the Asia Pacific Dividend Fund, and one is the International Value Fund, which is capital appreciation. And then we have another fund for high net worth individuals running from the Singapore office. So to expand into those countries, Singapore, Australia, Hong Kong, and so on, and then to set up these new funds, Ming Chia, you're right. Very similar. It's very similar to researching a company. It's very similar to the process that we have to go through. Is very similar in the sense that you got to do your due diligence as thoroughly as you can.
Right.
And I mean, in our case, it's made worse because we have never had any Malaysian fund managers who has expanded to Australia or to Hong Kong for that matter.
Right. Yeah, I have to ask this as well. Just remember, John, I didn't include in the questions, but this is very crucial, I think, because I want to understand the thought process behind going the close-ended route.
Yeah, I just wanted to ask that.
The open-ended, because most people who have gone for the open-ended because, I know I could be wrong, but maybe because of the ease of access, anyone can just buy it with a small amount of money, like you see in the unit trust or mutual fund world in the banking industry. But your decision to go the close-ended fund, Teng Boo, why was that the case?
Each investment product has got pros and cons. Closed-end fund has the advantage that you can invest for the long term in small caps without having to worry about redemption or net inflows of funds, right? In the case of unit trust funds, you have the advantage that you can keep on expanding your fund base because you can have new funds coming in. So I think each product has got its place depending on the objectives of the investor, right? So the investor must be able to sit down and say, what is it that I want, right? Do I want the advantages of a closed-end fund, or the advantages of an open-end fund. But Ming Che, John, I think one point that we need to make very clear is that all our funds do not have entry fees. There's no no exit fee.
No sales charges and all that.
No sales at zero. So if the net asset value is RM1, you buy and sell at RM1. And those entry fees and sales commission and the bid and offer spread can cost investors a lot of money.
Yes, I agree. Yeah,
that's true.
So far, at this point in time, we don't have distributors. If Ming Che, you want to invest in our China fund, or John, you want to invest in our Asia Pacific fund, we'll go directly to you. You come directly to us, no intermediary, and end up with all the transaction costs.
Yeah, no, it's a great. I have a few more questions I want to peel deeper about this, because I think I'll start off with the easier ones first. Do you think investors understand even the nuance, the differences between a closed end and open end? Because most of the investors, their first touch with actually a capital market product is usually through an intermediary, or either through an advert. I mean, I used to be a unit trust agent when I first started off. I didn't know any better. Now, obviously, and it's always, even today, the reason why the largest unit trust fund house in Malaysia is because of their agency force. There's no doubt about it, right? It's 20,000 strong, and you see, the problem is, a lot of retail investors don't even understand the nuance. Pardon me, I'm not condescending them or whatever, but they don't even understand the nuance between an open end and closed end. And why do you think people will have the capacity to want to go to a closed end if they don't know the difference? What will you say to that?
John, great question.
Yeah.
We are the only listed closed end fund, and you're right. Very few people are familiar with it, right? And that is the reason why, Ming Che, you talk about Investor Day. That's the reason why we conducted Investor Day, to educate the Malaysian public about closed-end fund, about value investing. And the Investor Day involved a lot of expenses, a lot of effort. Unfortunately, City of London, who is one of the large shareholder and fellow journalists, they wrote a lot of nonsensical things about the Investor Day. They said that we are wasting money and so on and so forth. And then, we put in so much. If you talk to our staff, every one of them is very scared when Investor Day, because that is an event where all of them, including those working in the Hong Kong office, in the Sydney office, and Singapore, because all of them have to come to help. Then got to work long hours, and they're very scared. They said, Teng Boo, they don't look forward to it. And we put in so much sacrifices. The expenses for the Investor Day, half of it are borne by us, half borne by the listed closed-end fund. Put in so much effort. We call in, Ming Che, I don't know which sessions you attended. We call in speakers from overseas to raise the standard of investor knowledge and so on. And then the City of London did a lot of bad media campaign, and then we got so cheesed off. We said, let's forget it, let's not do it anymore.
Oh gosh, yeah.
So we got very pissed off. But
I remember.
You're right that in London or New York, right, out of the total listed companies in New York Stock Exchange or London, about 13-14% of them are made up of closed-end funds.
Correct, exactly.
So if you translate that 13-14%, we should have about 130, 140 closed-end funds listed on Bursa Malaysia, except now we only have one. Why? So the question you ask is great, because the investors are not familiar. We wanted to take the path of educating them. We were shut down. The government doesn't promote closed-end fund. I don't know why. For whatever reasons. Why would London and New York and ASX have so many closed-end funds if these are no good products?
Correct.
So I cannot. It's an uphill battle. I believe very passionately in closed-end fund, but unfortunately, it looks like very few people are supporting what we're doing.
Don't worry. MJ and I, we are big fans of closed-end fund lah. Big fans of closed-end. We will never run an open. It's very. Obviously we wouldn't state too much in the future, but it's very unlikely we'll run an open-end fund lah.
It never made sense to us that when you start with the fund, you're 5% down. You know, that's
exactly. Yeah.
It's a very odd thing.
That's why we don't charge any entry fee and sales commission, because like you're correct. I put in $1, but I only get 95 cents to work for me.
Yeah. And the performance incentive is in a way currently structured. I know I'm going to get shot for this, but I think the incentive structure is in a way not incentivized to the investors' benefit. That's how I put it.
But John, the trouble is most investors are not aware of this. Most investors don't know this.
Exactly. And I talk to people who are, these are not what we call your normal mums and pups. These are high corporate achievers who are probably running an SME, who are probably high up in an MNC. Yeah. But when it comes to management of money, right? Yeah. There was one time this person, right, works for a very, very big bank. Doesn't even understand that there's actually a sales charge and there's an AUM fee.
Yeah.
Things like this, and you have a 20,000. Again, I said I'm going to get.
No surprise. I mean, we look at balance sheets all the time, right? They have all those money markets and unit trusts and all that. I'm sure they also not aware when they put.
Ming-Che and John, you both of you are experienced enough, and that's the reason why Australia and UK did a major reform of the way the funds are distributed in their countries. In UK, it's called RDR, Retail Distribution Review. In Australia, it's called FOF, the Freedom of Advice or something like that, whereby the financial planner, the financial advisor that's advising the customer cannot get their income from the product producer. If I'm the financial advisor or financial planner, I cannot get my commission from Public Mutual or Kenanga or Hong Leong or CIMB. I can only get it from the customer. Because why? They realize through the 08 crisis and so on, they realize that all the customers, at least in a developed market like UK and Australia, all the retail customers were actually skinned off by the advisors. They were promoting products where they received the highest commission from the product producer. That's why they launched this major legislative reform. They introduced 2 new acts. The Australia's FOF, the UK's RDR, where look, you are the financial advisor, you're the financial dealer, you can get your income only from the customer that you serve. As a result of that, the closed-end fund in UK and closed-end fund in Australia went
blossom. Yeah, fantastic.
Wow.
I can go on a lot more, MJ, but I know.
I know. We have past an hour. Teng Boo, do you mind? We have. I have just a couple of questions. Maybe John as well. Do you mind if we extend just a little bit?
Yeah, go ahead. All
right. Thank you so much. So I just have one last question on the business front. Then the last question I have will be your thoughts on the economy. But what's it like, right? Actually, I mean, being an investor or an analyst is one thing, but what's it like actually managing analysts? And also I ask this question because I know there are people in the room who might be in that position, so maybe I'll start there. And also just I think that'll be my question.
Managing analysts, okay. If you're talking about the Malaysian context, let me be very frank, Ming-Che and John. For example, they wouldn't want to join us because they say we work on Saturday. And then they say, I work for JP Morgan, I work for these big houses, it's only Monday to Friday, right? And they forget that they're not working in the headquarters of JP Morgan. They're working in only a tiny little farting branch called KL. If they were to work in the headquarters in New York, say like Morgan Stanley or Goldman Sachs in New York, it was last year where a bunch of first-year management associates in Goldman Sachs wrote to their CEOs and said, you know that, right?
Yes.
Can you please don't work us so hard, whereby we got to work in the office until 5 a.m.
Yeah.
Right? And that is working in the headquarters.
Yes.
Of course, here in KL, who cares about your JP Morgan branch or Goldman Sachs branch here? You're known. I mean, the only thing Goldman Sachs got a lot from Malaysia was the 1MDB.
Yeah.
So, to answer your question, we don't have real analysts. I sit in a lot of, Ming Che, you're right, I sit in a lot of analyst briefing, local, foreign. I attend Investor Day of Alibaba. I've gone to look at Tesla. I visited their factory in Fremont. I've tested their cars in Fremont. I've gone to visited a diamond mine in South Africa. I've seen the engine factory of Rolls-Royce in Derby, UK. So I've done a lot of research locally and overseas. And I wouldn't call our analysts in KL analysts.
Ooh.
Okay.
Because when they leave, for example, they go to a company, a steel company. After they have left, the CFO of the steel company is so, how would I call it? I mean, he couldn't believe that this so-called analyst can ask questions. They can't even differentiate between the hot roll and cold roll, or that kind of basic distinctions, So a lot of the companies that we talk to, we know. Because after that, when the analysts have left, they keep shaking their heads. So I am very unimpressed with the quality of analysts based in KL. Very unimpressed. And that is why, that's why I hardly hire any one of them.
Right. So then the follow-up to that is when they come in fresh, you know what to expect really, where the Malaysian public's not quite at that level. What is the I capital treatment, the re-education, let's call it, the process of training up analysts and things like that? Because from what I understand is I capital does it really, really differently.
Correct.
Ming-Che, just to share with you a company secret. Out of say 100 equity analysts that we take in, right? 80% of them cannot get through the probation stage.
Wow. And how long is the probation? 3 months?
How long, and what do we do? What happens in this stage?
6 months.
6 months, okay.
Yeah.
So what happens in that stage?
Yes.
Say bye-bye.
No, I mean, what do they need to do to prove themselves within that 6 months?
Why they say bye-bye?
Why do you say bye-bye? And
No, they say bye-bye, I say bye-bye.
You say bye-bye, sorry.
No, because they cannot meet our standards. Look, we want you to do research, not like they want, hey, Mr. Tan, you have Bloomberg or not? No, we don't subscribe to Bloomberg, we don't subscribe to Reuters, we don't subscribe to all that. So how to do research? Huh? Oh, my goodness. You mean you got to do your research just by Googling? If I can do all my research by Googling on the desktop, I don't need you. So we tell them, if you are in the office all the time, I mean, this is before the pandemic, right? If you're sitting at your table all the time and you're an equity analyst, you're not doing your job. I want you to go out.
Well said.
You go out, like let's say, for example, Padini, you got to understand what the competitors are doing. Why are people buying Charles & Keith instead of Padini or their Vinci shoes, right? So you must be able to go out to the field like a real businessman would. The real businessman doesn't sit there at the table just Googling, and then, wow, I can get good returns. No. Get your hands dirty, understand what the industry is all about from all angles, 360. So most of them, this was many years ago, this was a long time ago, where this bunch of new analysts recruits that we took in, we told them, look, I give you this assignment. You will go to the Lamborghini dealer's place. You will go to Piaget.
Wow.
You will go to Cartier and then see whether the sales assistant entertain you or not. In other words, you must have the ability to talk to people, all kinds of people, to interact with people, and the ability to get information from all kinds of sources. So that's why after 6 months, most of them cannot be confirmed.
Do you still take applicants above 43? Jokes aside, Mr. Teng Boo.
I was in Germany. This was many years ago when I went to see Volkswagen in the headquarters in Wolfsburg.
Yeah.
And a bunch of analysts were sitting in the MPV. We're all going back. And the analysts, most of them are not young. Most of them are in their 30s. And a lot of them have got PhDs. And I was the only Asian there. The rest were all Angmos. You can listen to them. The questions that they asked were very good questions, very in-depth, very questions that you know that they have done their research very hard, very top. They have thought through the whole thing really.
What do you think can, just to peel one, this is a very fascinating question, because what do you think can help elevate? Obviously, it's all doom and gloom based on your what do you call it? Your assessment of the analyst community here. But what do you think will help elevate? What would be the one motivation factor? Is it because there's not enough competition that, when a JP Morgan or Morgan Stanley report is there versus that of a local house, right? There's no the feeling that, my standard is here, the standard is there, there's a motivating factor to get there? Or is it because of the incentivization structure that is not done properly here? I don't think there's any different, but what do you think can help elevate that?
Not enough supply.
But it's okay. Here comes my thoughts. Because we MJ and I, we know a lot of analysts, a lot of fund managers, and it's a very secretive and competitive world in the sense that they keep it very close guarded. You want to come in, right? You're not high finance, you don't have CFA, you don't have this, right? It's a very close guarded, and that's my perception. I'm being just very honest about it. And here you are, you're saying you're not getting enough supply, So why is this mismatch happening?
I'm talking about the right supply. I mean, for us, whether you have CFA doesn't matter to us, right? A CFA or a finance graduate probably will come and tell me high risk, high return. Ming Chia, if you listen to our Investor Day, we'll tell you if you want high risk, high return, you just get a 5-year-old kid. The 5-year-old kid can give you high risk. What do you need a CFA, right? So high risk, high return is all bullshit. So the supply is not enough. And when I say supply, I'm talking about quality. I mean, I've been recruiting for a long time, right? And I can see the quality has been dropping. Through every cycle, the quality has been dropping.
Yeah. Actually, Teng Boo, MJ just showed me the one that you had, the assessment of a university group on Asia.
I
rewatched that.
Saga, I think.
Asia.
No. But they're from the university, the Tenaga National University. I think it was Asia, the Budding Investor Day, I believe.
Yeah, Budding Value Investor Award.
Yeah. And I was just so shocked. Finance graduate, and he took. I don't know if you remember, Teng Boo. He took. I always save the timestamp for this video. So he took the intrinsic value of the target price from a random website. I don't know if you still remember.
Yeah. I mean, the quality was bad.
But you see, here we can go on lamenting about the quality. But how do we elevate that in a way? What do you think can either structural changes or either, because I know you mentioned supply, but what I'm trying to say is also the demand side, right? Is a very a tightly guarded thing that people who are interested actually want to get in, And MJ and I, we meet very brilliant people, especially in our research team. Very brilliant people want to get into the industry, but they are being cordoned off by, I would say, the entrenched, for the lack of a better word. How do you think that can change in a way?
That's because they didn't apply to capital dynamics.
Okay.
Well, what is the email to apply to?
No, I mean, jokes aside,
Yeah.
we have just taken in about a week ago a PhD biology graduate to be an equity analyst, right? And we're looking for people who have got postgraduate qualifications in electronic engineering, in computer science, in biotechnology, in environmental science, in physics, in mathematics, to be our equity analysts. I mean, whether you're a CFA or not, it doesn't matter to me. In my case, I've never sat in an accounting lecture before.
Wow.
It's always been self-taught. And if you understand the business model of that particular company, the accounting is the easiest part of it.
Completely agree.
Because we don't look at accounting profit, we look at economic profit. Accounting standards are all bullshit. They are made by auditors. Every year they got to change the accounting standard, because if they don't keep changing the accounting standard, they got no money to charge you.
No job, yeah, correct.
Right, no income. So they got to keep changing accounting standards. But at the end of the day, it is still the same.
Yeah.
The economic profit is what matters. So if our analysts or supposed people want to be analysts, if you can understand the business model, we want you. Because the part about understanding the P&L, the balance sheet, that part is very easy. Within about a month, you probably can pick it up already.
Yeah.
That's very true.
Yeah, it's so true. It just made me reflected my conversation. I was attending ES Ceramics at AGM, and he the CEO himself was actually a trained accountant, and he was complaining about accounting standards because of lease liabilities and all that. Right?
Yeah, I'm sure. I mean, you talk about Capital A or Asia. I think 2-3 years back they had the IFRS.
MFRS 16.
MFRS 16. Yeah, with the
the recent PN 17 for Capital A.
Yeah, or the recent one, yes, the PN 17 for Capital A.
Which is so ridiculous.
Yeah.
Indeed.
Yeah.
Okay,
yeah. MJ,
I know. I have one final question, and I know you are also very interested in this topic. So that has to do with the global economy, right? And I don't even know where to start, but I guess we'll start with inflation because this is really being felt on the ground. The previous podcast guest that we interviewed was telling us, because he's in the food industry, he's saying that certain outlets in certain KFC outlets, right, actually have run out of chicken.
In Malaysia?
In Malaysia, like in KL, in Klang Valley, Klang Valley Smack Center, they're running out. Of course, the central ones don't lose chicken.
Okay.
But those in the suburban areas are actually not having any more chicken. So what do you think about this inflation situation? Is it do you think it's just a once off 2-3 years, or you think it's going to be persistent?
The world has fundamentally changed since 2000, in a sense that we see crisis after crisis.
Yeah.
You have the public health crisis in 2020 now, and of course that flowed on because Trump and Biden both are hopeless, both are incompetent presidents. They throw in so much money. I mean, why is it that China doesn't have inflation? Why is it that only US primarily, I mean Europe to some extent? It's because the two presidents were so scared that they're going to lose their presidency, and they keep on pumping. I think in total, we calculated the other day, they have put in $13 trillion to deal with the pandemic. Of course, you have supply disruption and you have huge demand. Of course, you have inflation. Now, before that can subside, right? Before the supply chain can normalize, then you have the Ukrainian crisis, which I don't know. I mean, I wish the United States, I wish the West will give a bit more respect to Putin. It's a crisis that has the potential to, in terms of economic impact, it has a potential to be even bigger than the pandemic. If things get out of hand, it could be something like similar to the first oil crisis of 1973. So this is still ongoing, it's still unfolding. I don't think it has reached a crescendo yet. So before that can be over, the next crisis I'm looking at is related to climate change. I'm a believer, I'm very convinced that climate change will worsen, that we meaning the world cannot maintain the 1.5 degrees Celsius increase in global warming. It will be more than that because the whole political structure, the whole governance structure doesn't lead to climate change being handled properly. So when you have one crisis after another, how am I going to tell you when is inflation going to come down? I can't, because this is not your typical inflationary cycle like in the 70s, due to excessive demand and so on and so forth, and therefore I raise interest rate, I cut demand. Right? In the case of Ukraine, okay, Russia, largest gas exporter, second largest oil exporter, right? I cut off my supply, what are you going to do?
Yeah.
Or next 1 or 2 years, you have unexpected climate change impact.
Speaking of the Ukrainian war right now, right? What is the worst case scenario in your head? I guess what are you most fearful about? Because some people think, look, it's just a Ukrainian problem, right? Like, okay, whether Putin ends up getting it or not, it's going to be contained. But you seem to be suggesting that it might not be the case.
I think got to respect Russia. They are, in terms of military power, they are on par with America, right? I mean, you're not dealing with, Russia is not a North Korea, Russia is not a Syria, right? So first thing is the military power is immense. Second thing is they are very important in a lot of resources, not just natural gas and petrol. In the case of neon, which is used in the production of lithography in semiconductor, a lot of it comes from Ukraine. So a wide range of resources come from Russia. And then don't forget, if you trace the history, that's why we ask a lot of people to listen to Professor Mearsheimer. Professor Mearsheimer is a professor from Chicago University, right? In 2015 and recently 2022, he said that the Ukraine crisis is the fault of the Western countries. It's not Putin's fault. Because why? After the 2008 Bucharest summit, right? NATO says, I want to bring Georgia and Ukraine into NATO. And Russia's immediate response is, if you do that, that is a direct threat to Russia. I mean, Russia has been saying that again and again and again.
Yes.
So why does Zelensky, if you really want to take care of your Ukrainian citizens, why do you take a policy that purposely confront Russia?
Yeah.
You could have said, okay, we'll talk, Ukraine will remain neutral.
That's right.
And therefore, no crisis.
Yeah.
So now you have a situation where Zelensky being brought in by US and back being supported by NATO. Of course, you have two global giants fighting. And Biden is not going to step down. Putin is not going to step down.
Yeah.
So what will happen?
Yeah. The sad part is that it's a chess game, and everyone wants to save face already. And But to look at the situation objectively, I mean, that's why I said, for those of you, your audience who don't want to listen to me, go and look at YouTube. Professor Mearsheimer of University of Chicago, listen to his talk. He gave you a very good explanation as to how the whole thing could have prevented if
only America and NATO do not keep threatening Russia.
Exactly.
I've watched the 2015 one where he quite accurately predicted what would happen. Professor Mearsheimer. I just have one last question with regards to this topic, and that is where is China's role in this? Because I know you're a big fan of China, and Russia is always known to be close friends or frenemies, let's call it, with China historically. And it seems to me that China is in a hard situation because obviously they don't want to get involved in all of this. But then there's also the tension that they have with the United States. And then, of course, internally also, things are doing well in areas like the coastal cities, they're booming and all that, but there's issues like inequality, there's issues of the demographic change. What are your overall thoughts about China's response to the current crisis and future crises?
I think China should be the global leader. The faster, the better for the rest of the world. I mean, you listen to the Foreign Minister Wang Yi telling Europe, you cannot ask people to choose sides. Because when you ask people to choose sides, you are taking a confrontational approach. You're asking people to fight.
Yes.
In a complex issue like that, you sit down and you talk. You work out the differences, you work out the common grounds, and you talk and you give and take, and then you settle the whole thing. You force people to choose sides. What, you think Russia and China will say that, come on, who are you to dominate the world? You keep saying that I should exist in a rule-based global order, right? What rules are those? When the West, when UK, when Britain and Japan all invaded China in the 19th century, what rules were they following? So what rules are you asking people to follow, right? You cannot expect emerging powers like Russia and China to just sit down quietly and let US say, okay, I can have my Monroe Doctrine. My Monroe Doctrine can be applied to all over the world, but you cannot talk about protecting your own integrity or sovereignty.
Yeah.
So
exactly.
China's approach is very different. That is why, if you look at history over a long period of time, even when China was the strongest country in the world, there's never this type of conflicts. China's approach is what? Okay, my neighbors, I fought with you in Turkestan, Turkmenistan, right? We cannot agree. Never mind. I send my beautiful princess to marry your son.
Yeah.
Right? And let's settle it.
Yes.
And that's why China never had a colony. China may have a vassal, tributary, right? Okay, never mind. You respect me, right? Instead of me conquering you, you send me 3 kilograms of gold every year. I'm happy with that.
Yeah.
So the approach, the mindset, I mean, you look at the Chinese. I mean, John, you in Alostar, you know a bit of Hokkien, right?
Yes.
Hokkien love to say, Gong Sua, Gong Sua.
Gong Sua, yeah.
Right. Gong Sua means what? Talk and settle.
Correct.
It's not go and xiu pa, it's not go and fight. No.
Yeah.
The Chinese mindset has always been, hey, let's talk, let's settle. Let's give and take, right?
沉上就好了.
Yeah, that's right.
Yeah.
So the faster China become a global leader, the faster the rest of the world look up to China, the more peaceful the world will be.
Great.
I have so many more questions, but I know I've taken up too much of your time. So I hope you enjoy yourself.
I have one last question though. Just one last question. I know macro, we can go on and on. We love. I do have one that is more Malaysian centric, and in this case, because of your 41 year of investing experience, what do you hope for Malaysian listed companies going forward? Obviously, you've seen the heydays of the whole past and all that, and then the conglomerates of the 1990s and 1980s and 90s, and then in the year 2000s, the boom of the semicon industry. But in sense of qualities or everlasting qualities to make Malaysian companies like a Coca-Cola or General Electric? I don't know whether that's too far-fetched, but what do you hope for listed companies in Malaysia to be on par with, their more developed countries actually?
We will be able to do that because Malaysian entrepreneurs are world class. It's just that we are not given a level playing field. A lot of times the obstacles are locally created. If the obstacles are removed, Malaysian companies can take on any company in the world.
Fantastic.
Right? I mean, it's not just the UNICEF, the MPI, the Top Glove, and all that. If you look at Asia has done a lot. Yeah. I mean, I keep telling people, Singapore Airlines had to be rescued by the Singapore government shareholder.
Yeah, exactly.
Asia never received a cent from the government.
Yeah.
And not just that, you look at Malaysian who are CEOs like Broadcom, right?
Yes.
CEOs from Penang.
Yes.
Right? Then the founder and the CEO of TPG, the mobile operator in Australia.
Correct. Also Malaysian.
Malaysian. So we have the capabilities, just that there are a lot of obstacles that should be removed. And then I think the Malaysian capital market is dead. John,
I agree. I know.
The number of IPOs in Jakarta, right, is more than Malaysia. And the IPOs can have IPOs of technology companies.
Yes.
Bukalapak and so on, and the Gojek and so on.
Yes.
So if your capital market is dead, how are you going to move forward?
Here we are, the biggest hoo-ha for the year is Farm Fresh. So if you think about it, right? I think Yeah. So I've thoroughly enjoyed. I want to spend more time with Teng Boo, obviously, but we want to take up more time.
I got to run.
Thank you so much. I hope you enjoyed yourself, and maybe a part 2 in the future.
Yeah, sure.
Glad everyone listening. I'm sure you've gotten tremendous value of this podcast. And before we go, Teng Boo, where can people find you if they want to find you? And maybe if they want to apply a job, who do they send their email to?
I mean, you say find me in what sense? Because they can go to our website. If you go to our newsletter, it's www.icapital.biz. That's where our investment advisory business is. If you want more on the corporate side, is www.capitaldynamics.biz. We don't use .com, we use .biz, B-I-Z.
Okay.
All right. So on that 2 websites, and if you want to apply a job, you can send it to careers with an S, careers@icapital.biz.
Okay.
All right, everyone heard that. So guys, hope you enjoyed the podcast. And if you don't already know, we are also on Spotify, YouTube, and of course, don't forget to like, comment, subscribe, share this podcast with your friends if you found it very useful, friends and family. And guys, signing off, and I'll see you in the next one.
Thank you so much, Teng Boo.
All right, bye-bye. Thanks a lot. Thanks.
Yeah, see you.
Bye, guys.